window.
Hello traders, Gary Wagner here. It is the 9th day of June, approximately 11:15 in Honolulu, Hawaii on Thursday, and this is the daily report for gold. Gold is about to close for its evening break. It has about 1 minute left in trading. Currently trading up about $6.40, 15.44, 15.45 bid-ask spread. We are looking at a 360-minute straight candlestick chart. We'll start our report out with this particular chart. The reason for me looking at this chart this morning is to give you an idea and also a sense for the fact that I do believe that the support that we talked about, and this is at 1530, that seems to be pretty superlative support at this point, as you can see. We are also going to talk about the fact that we still have some real resistance right around 1550, around 1549 and change, and we'll be talking about that throughout today's report. There's no doubt that we have been in a fairly tight range, and the market has kind of been working its way back and forth in between 1550 on the high and call it 1530 on the low. That's as of recent. You can see that right in here. And even though when we look at this marketplace in a compressed sort of way, you can see that we have had a pretty substantial rally off of these lows, this being the bottom at 1461. However, when we go ahead and blow this chart up, what really becomes clear is the fact that this market has been almost range bound, as you can see, trading within these defined ranges. Now, the one thing that I am noticing today, which is giving me some very, very strong feelings about a resumption to the bullish trend that we have been witnessing, is I do believe that we have this pennant formation, and within the smaller pennant formation we absolutely can see a breakout that has developed on the 60-minute chart throughout today's trading day. As you can see, this is the beginning of our session right in here. The market is closed. It's closed at 670 higher, 1544.30. Now, when we compress it, and we are looking currently at our 628-minute chart, what also becomes quite apparent is this very, very, very strong resistance that we have to see the market take out if we are going to begin to trend higher. It is absolutely critical in terms of a resistance level that this particular area become breached if it is going to continue on a uptrend and not go into a corrective wave at this point. And that's something that I've still not seen happen, although we have seen it come off of these lows and move back up. What I've also seen is, in terms of straight occasions, the inability, and I call these scouting parties, this term was first labeled by Steve Nisson, and what happens is the market will go to new untested highs. It will test the fortitude of the bear, so to speak, and in these last 3 attempts it was unable to form what is called a beachhead, meaning take out this particular resistance level and turn it into a support level. So for that reason, I am still very cautious. But the other thing that I'm noticing, and this is easily done by turning our basic candlestick chart into our average chart, our Henkin Ashi, what you will see on this particular chart, and we'll take a look at it on our daily also today, is that when we take a look at this recent trading activity, and this of course is today's trading activity, the 9th, and realize that on a 600 plus chart, you're breaking up the day roughly into 3 candlesticks. You can see all 3 are green. You can also see what I look for, which is the absence of tails on these last 2 Henkin candles. And finally, we are going to go to our daily chart. And even on our daily chart, when I take a look at it, although I'm very pleased with the performance that I've seen today, this higher market, $6.70 higher here at 1544, I'm still looking at a market that has genuinely formed that kind of a rounded top. But what I do like is the fact that as we have seen this market consolidate itself, what we are witnessing is we do have a higher low today. We also need to see a higher high, and we aren't getting that. And that, for that reason, I still see some very, very strong resistance in this area, that 1550, and we really need to see the market take that out. Of course, we are long 1488. We trailed our stops up yesterday to 1525, right in this area. What we've done is we've put it below these recent lows right in here. So if the market does want to correct and come down, of course, we will be able to pull profits from this range and pick up a considerable part or size, let's say, of the move that we have just witnessed. And in that way, we will have captured, as I said, a good portion of the market's move. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.